I hope you're all doing well today. I got a video for you on Sunday and it has been a highly requested stock. The theme of the comment section of the last week is, Jacob, can you please do a video on United Health Group? And the last week I've just been doing a little bit of research into it, getting my thoughts together, and today I'm going to deliver that for you. So hopefully for you guys that wanted this video, it's here, and hopefully there's some useful information on this video. And I can see why a lot of people are getting interested in this stock, because when you do look at the stock, a very significant drop. 1 month, the stock is down 51%, and this has been a pretty decent performer when you zoom out. All time up 108,000%, and really since 2015, if we look over the last decade, with the drop that it's on, it's still up 189%, but before the drop, it was one of the best performers in the market at a 412% return, which is not too bad at all. So we're going to take a look at that one for you today. Before we do, just a little shout out, if you are on the Patreon, I have just dropped 2 exclusive videos over the weekend. One of them was the US earnings review, so I look at some of the companies that reported earnings last week on the US side, which were like Topgolf, New, Alibaba, Huya, Gambling.com, and dLocal. And as well as that, I did a UK earnings review of Watches Switzerland Group, Eurocell, and Aviva. So if you do want to support the channel and get 2 exclusive videos a week, links in the description, guys, to join the Patreon. Discord with 500 members on to talk about stocks, including me. And it's £6 a month, or if you sign up yearly, it's £60 for the full year. And as well as that, there is only 2 days left to get the Webull offer. I'll make sure I post that in the description in the comment section as well. And if you do sign up and deposit £100 and hold it in your account for 30 days, you get 5 free fractional shares. And if you deposit £2,000 and keep it in your account for 30 days, you get 20 free fractional shares. And those shares are worth a minimum of $3. So go get yourself some free shares, guys. Now let's go on to the video why you guys all clicked on it, which is United Health Group and my thoughts on the stock. And as we can tell, being historically a great performer and having a very significant drop in the short term. And I'll have to say right now, it's a deserved drop in the short term. There is currently down at 12 times earnings. There is a nice 2.8% dividend yield on this stock as well. And when you do look at the historic value of this company, the company has normally in the last, I'd say 5 years in particular, traded around the 18, 19, 20 times earnings ratio. So this is right now a significant drop from where it normally trades at. So that's what a lot of people are looking at right now. Now, let's start with positives, because there's a lot of negatives. We'll get onto the negatives in a second. But we do start with the positives. First of all, the old CEO is back. So the CEO, Stephen Hemsley, who was in the company to 2017 and was there for around about a decade, I believe, which was one of the best performing times as a share price and as a company, has come back to take over the company's reins as the CEO. That is a positive, because, you know, who would you, in this sort of situation, who would you want to come back and manage this sort of space? Probably the CEO that got you into such a good place previously. So that certainly is a bit of a positive. Historically, great performer. If you look at historic valuations or growth figures, the company has grown 9, 10, 11, 12%, double-digit percent every year. So historically being a very good grower as well. In a industry, if we look at United Health, they are helping people live healthier lives, which they do from their insurance point of view. And as well as that, when you look at the situation of the healthcare aging population, we're going to need more healthcare as the population keeps on aging as well. If we look at the comments of the CEO since he's come back in, he says that he does expect to get back to growth in 2026. So you could say in 12 months' time, this might look a lot better, which isn't that long to wait. As well as that, he does say that he does believe that they can get to the long-term projected growth of 13 to 16%, which they're trying to achieve. And obviously that's what they've historically done as well. So this isn't a company just kind of saying things like they've never done it before. This is what historically they've done as well. So if they were able to do that at these sort of levels, that looks very good as well. And as well as that, if you want a little bit more confidence boost, the new CEO, or the old CEO that's kind of come back in, and insiders in general have all been buying up shares, which is significant, because clearly if they're able to put that many, and I think they've had previous skin in the game as well, and with the new shares they're adding in, confident boost. Clearly, you know, they're saying like, yeah, we think we can turn it around, and if you want a little bit more of a confidence boost that we're going to do it, we're going to add some of our skin into the game. And they've been buying some shares, the CEO's bought some shares, the CFO's bought some shares, so that looks very positive as well. Now, negatives. Obviously, if he drops 50%, there's going to be some negatives here overall. So the first thing is to talk about what started the dip. So what started the dip is they said that they had heightened care activity. Now, one thing I don't like about United Health is that they use so much jargon in their earnings report. I really like it when a company just says, this is the issue and this is what we're going to do. With United Health, I scanned through the earnings and there's just so much jargon in there. Just say what's going on. That's what you want, especially in these sort of times. And they're saying heightened care activity. So what that says to me is that more people are using the care than what they thought they were going to do. The second thing they have as well is that the care that's being used is used to bigger issues. So those are two issues that you have, because when you forecast what you're going to be charging your patients, you're roughly going to look at what you're forecasting and then you charge them, and clearly they're thinking we've got this completely wrong here, and it's gone up a lot since 2024. So that's one of the big issues they have at the moment. Now, what is probably as well is that there is this Medicare funding as well, and that has also been big reductions as well from the previous government. Now, this what makes me nervous as an investor, because I like to buy what I know and I like to buy what I can see, and I don't like buying things that are out of my control. When I look at stocks like pharma, I don't like a lot of farm stocks because when they get into stage 2, stage 3, I don't know if they're going to pass the trials, and that makes me nervous. I don't like buying mining stocks because I don't know where commodity prices are going to go. I don't like buying oil stocks because I don't know where oil prices are going to go. I don't tend to like to buy things that are affected by external things. So in the healthcare space, I don't have to worry about Hims and Hers dealing with insurance and what insurance is going to pay out, because people are paying it up front. That's one reason why I like a stock in the healthcare space like Hims and Hers. When I look at United Health, this is a big thing that makes me nervous, is that there's also these kind of external factors coming in and affecting the business as well going forward. So that's something I don't like. They said as well they've got to cut the full guidance because of this. So this issue is something that isn't going to be a Q1, even though they say they're going to get it resolved in 2026. There's still going to be a few bad quarters coming up yet. And that also makes me think, okay, how bad is it going to get now they're cutting the guidance for the full year? And to adjust for that, it's going to take a little bit of time. So that's also making me a little bit nervous. The other thing that's making me nervous is the other cuts that could potentially come in. We've seen that Republicans could be more tempted to cut more Medicare in this space, which makes me a little bit nervous. The big thing that's making me nervous is that, and this, I was a bit on the fence until this came out, which is the DOJ is potentially going to be looking at United Healthcare for alleged Medicare fraud. That makes me nervous because fraud is a big thing. Because if they are looking at this, what happens then? If it's proved, I mean, it's not. I don't think it's official yet. But what we've seen is United Health say there is investigations going on, but they've not disclosed what those are. So once again, there's too many blurred lines. I don't really like that. And as well as that, the DOJ are investigating them. I mean, if this was to, I don't know if it will, I don't really know, but if this was to find out to be true, I mean, what's going to happen then? Are they going to get paused on the Medicare funding? That's the thing that's making me really nervous. If that's fraud is a major issue, I'd be a lot more confident when I know what's going on with that sort of thing at the moment. And the thing that also makes me nervous is the CEO's gone. Now, we talked about the CEO coming back, which is great, but the problem is that why did the old CEO go? Now, I know that you could argue the case, well, the stock has been underperforming for the last couple of years, but to go now is a thing where I look and think, is the fraud? Is that kind of, is that why he's had to go? Because it's like, this is starting to come out now. That would make more sense why the CEO has now gone away. But a counter argument I could say to this is that what I've just mentioned there is that all the insiders are actually buying up stock at the moment. So would they be willing to buy this stock if they knew that potentially this could get a little bit worse for them? Probably not. So that also works against that maybe this isn't true, but overall that just overhanging, it just makes me a little bit nervous at the moment. And then there's just a combination of all the other factors going on at the moment, which we've seen from the cyber attacks on this company in 2024. We've seen the murder of the CEO of the insurance business that's happened, which that's going to cause shockwaves inside the business for sure. And the whole investigation, what's going on over there at the moment. And I just look at the company at the moment, and you know what? I can see why people are looking to buy this dip at the moment when you look at such a good performer. And I like a turnaround play. I've bought many turnaround plays before, but when I'm buying turnaround plays before, I'm quite confident that they'll make it away to the other side because of some factor that I'm seeing. Right now, I'm just seeing issues, and we're not talking small issues, by the way, like fraud is a big issue. And I'm not just seeing like one issue that they've got to kind of get the hurdle over. I don't think I've ever seen a turnaround play with so many issues. Like normally when I'm talking about a turnaround play, I'm talking about one issue, maybe two issues, right? The list for United Health at the moment is like 5 or 6 issues, major amounts of issues, and that makes me a little bit nervous. I'll just show you some numbers and then I'll kind of give my full conclusions towards the end. So I've done 4, 8, 12% revenue growth. I've done about 18 times earnings, which I think is fine. 5% profit margins on the low side, 6% profit margins on the high side. They're probably not going to expand those profit margins, which is another little bit negative as well. And 6% profit margins aren't anything major as well, which is probably worth throwing in. I can't see them having metric expansion above 18 times earnings as well, which is probably worth pointing out. But these upside coming in, when you look at the low side, 63% upside, that's not too bad on the low side. 127% on the mid side. On the high side, 163%. So the numbers are actually saying, you know what? If United Healthcare sort this situation out, you probably could make money on this. And in fact, if they do sort it out, you are going to make money on this. My issue is that there's just so many things going wrong. That just makes me completely nervous, the amount of things that are going wrong. This isn't a situation where there's just 1 or 2 issues. I think there alone, I've gone through like 4 or 5 issues that are going on. And some of those issues, I don't really know how they're going to play out. I don't know about the fraud issue. I don't know about the Medicare issue and the funding around that. It just makes me so nervous. And I know it's probably like a little bit of a stupid reason, but as well as that, I do these videos and what I say I do, so if I buy something or sell something, it's all in the open. It's all on the eToro account. And I know that I tell people not to. I always say do your own research, but I know if I buy a stock, there's going to be about 2,000 people that follow me into that stock, which I guess it's a bit of a compliment that people do follow me into the stocks. But when I talk about these stocks nowadays, I've got a new level of responsibility where I've got to make sure I'm not buying stocks where I think like 70% this is going to work out. I've got to buy stocks like I'm 95% sure this is going to work out. And I look at United Health and I think, what is the percentage I think this is going to work out? Probably about 70%. So, I think it'll work out rather than not work out, but there's still a bigger room for error than what I would normally go and invest in. And like I said, I think, if you were to buy this, you'd make money from it. I think there's upside there. And if you do buy it, I wish you the best. I just look at it from my point of view and I just see so many things that make me a little bit nervous that there's 5,000 stocks out there. And I think I saw Sven Carlin make a video on this and he said something similar, like, there's 5,000 stocks out there. I only really need to own the 10 that I feel are the best out there, or the 20 that are best out there. And does that come in this list? And I don't know if it does come in that list for me. And I think, if the stock market was to pull back 10% tomorrow, right? And I've started buying this, would I regret, I've used all that money in United Health and I'd rather, I've just seen Google dropping over 10%. I'd rather go buy that. Or I've got Hims and Hers that's just dropped 10%. I'd rather go buy that. Will I more than likely see a stock that I like more drop to a better value than United Health in the next 6 months? Probably. And that's what I'm kind of feeling, is that I don't know if I want to deploy my money in this at the moment, because I just think risk to reward, there's probably going to be better opportunities out there. And there is better opportunities out there. I'd rather go buy a Google right now. I'd rather go buy a Taylor Wimpey right now. There's other stocks I think I'd rather buy that don't carry the amount of issues that this currently has. And that's what it kind of comes down to. So just too much going on for me. I think if you were to buy it, I think you do make money on it. And I think it does well in the next 5 years. But I don't sleep well investing in this, ultimately what it comes down to. And we'll see what happens. Now, like I said, it looks like this is going to be an issue that affects them for the next month, the next 2 months. And you know what? I'll keep an eye on it. I'll see where financially they're going. I'll see if there's more developments on this DOJ issue. And maybe when it calms down, maybe I'll revisit it. By then, you might argue the case, well, if those issues are kind of calming down, the stock might be $350. It might be $400. Well, if that's the case, there's still potential that you can make money on it, especially if the risks have gone. So, yeah, for me, it's just way too much risk at the moment for me personally. And you know what? You might say, if you're not buying now, when are you going to buy? But I'm okay with that. There's other stocks I'd rather buy, and I'll keep an eye on it. I'll come back into it in a few months' time. And like I said, I actually do think it probably work out. But for me, just too much risk to reward, and there's other stocks I'd rather buy, and that's ultimately where I think I sit with United Health at the moment. So, yeah, if you guys wanted a video, there you go. Hopefully it's useful for you. Hit the like button and subscribe, and I'll see you on Monday.